Hello traders, today is day number 25 of the small cap market open test trading. I've written a plan that's specifically designed to trade small cap stocks which are notoriously volatile and unreliable. So we are now about 37 trades into it. It's pretty profitable at this point. We actually started out the first 2 weeks being unprofitable. Things have turned around in the past couple, maybe 3 weeks, and we're now ahead of schedule as far as how profitable that I wanted this plan to be. And I'll go over all of those results in detail on Sunday. But so far so good, and this is a perfect example of why whatever plan you're trading, you have to take at least 100 trades with it before you can decide whether or not it's profitable, because 10 trades, 20 trades even, a couple of weeks of trading it is not enough to determine that. So how can you continue to trade something that is unprofitable for you for as long as 2 weeks or 20 trades? You have to trade just one single share so that you don't feel worried about all the money that you're losing, and you can let the statistics play out, because that's all that day trading is. It's a matter of statistics and time, number of trades taken, that kind of a thing. So anyway, let me show you the screener, and I'll show you how I pick these stocks that I trade. Today's trade was extremely interesting. There's a lot of valuable information that we gained from this trade, and I'll go over all of it in detail. So first of all, how I pick these stocks, I use my small cap screener, which is right here. I click the three little dots and click modify. Otherwise, your filters will not be applied, so that's an extremely important detail. These are the filters that I use, and I organize the list by volume. I'm only interested in the stocks that are on the very first page, and there were quite a few this morning. Some of them did not meet my daily chart criteria. I'll show you that in the video as well. The one that I ended up trading is down here. It's PERI, sorry about that, which is low on the first page, but it's still on the first page, so that is relatively high volume in the small cap market. And you could see that right now it has 2.17 million shares of volume. At the open, I want it to have 500,000 shares or more. And you could see in this case, that means that it had high relative strength. That doesn't always work out. Just because you see something with high relative strength does not mean that the price is going to continue in the direction. So anyway, I haven't seen a whole lot of correlation between that. That's all I'm saying right now, because I know that's a popular trigger for a lot of traders. So anyway, let's go to the video and I'll show you what I traded. Whoops, let's see, let's back it up here. All right, so now another thing I want to say too is that we all know that no trader is perfect, but I always say, or I often say, that you could trade your plan perfectly, but the same is true for the plan. There's no such thing as a perfect trading plan, and some days it's going to work better than others, and today is a good day that shows you where it didn't work so well, and I'll explain that as well in detail, and how we still could have ended up profitable on the day, even though I am walking away technically up 1 R for today, and that's what is going in on the spreadsheet. I'll go over all the details of that. So first of all, I look for the daily chart on all of these ticker symbols that I'm checking. I want to see that the price is trading above the 200 MA. That's this red line that's on the daily chart. If the price is trading above that, then it can be on my chart page, and I could look for my trigger to take an entry. So that takes a while. That's one of the great things about this plan, is that it forces you to wait. There are rarely any trades that happen within the first few minutes of the market open. Sometimes there might be one that happens in the first 10 minutes, 15 minutes, but even that's pretty rare. And let's take a look here. So here's PERI. And let me go back to where I pulled it up on the daily chart. So there it is. And you can see that it just barely has a daily moving, 200 daily moving average, but it is trading above that. Let's see. Oh, no, I'm sorry. I was way back. That was on a different chart. That didn't make sense to me. I thought, okay, it did have a longer 200 moving average, and here it is on PERI. Nice uptrend. And you could see that it's gapping up today, and it's still obviously above that 200 moving average. So very strong mover. But the main thing I'm looking for is that the price today is trading above the 200 moving average. So let's take a look now at the lower time frame. So here's the 1 minute chart. So first of all, I have to mark out the previous session high. Could be from the pre-market or the aftermarket or the previous day. And then my first criteria is that the price must break out above that. Once that happens, then I look for the first high of day and the second high of day. So here's the first high of day. I know when it's the first high of day because the price goes up and then it starts to pull back. So even one candle of pullback will signify the high of day in my eyes. That's my definition. So now let's move on. We're just waiting for the second high of day to be established, and there it is, 2680. Now this one does something interesting. It double tops here at 2680. When that happens, I still consider that the second high of day. So that means that if the next candle breaks out above this one, that I get in on the stock. Obviously, I'd prefer it to pull back a little bit, but you don't always get what you want. And sometimes this happens and you end up in a winning trade, like a one and done type trade. So let's see what happens here. So there we go. Let me just show you the entry because this was really interesting. And this is what I mean by you could have a very good trading plan, but no trading plan is perfect and it's not going to work perfectly every day. And that is exemplified in this very first entry. So what I'm waiting for is for the next candle to break out over that 2680 level. So I want to see 2681 or better, and then I enter. So let's watch what happens here in real time. It happens very quickly. You can see there's only 5 seconds left on this candle. So as soon as this next candle opens up, it pops up and that triggers my entry. So watch this in real time. So keep your eyes over here. We're looking for 2681. There, look at that. It just opens up here and immediately pops up over my trigger. So I have to trigger my hotkeys. I'm going to show you that one more time in real time just so you could see. I don't think I hesitated at all to take that entry. Maybe a second or two. Not sure what kind of a difference it would have made. I got filled near the high of that candle, and that pretty much killed my profitability for the day. Unless I would have held the second trade to 3R, and I'll explain that as well when we get there. But right now I'm moving the chart over to my single chart view. That way we could see everything in detail. So my desired entry, my ideal entry was just over this white line, and my stop loss would have been here. It wouldn't have made any difference. This is the interesting thing, and this is generally the case. Whether I get slippage or not, if my entry fails, it's going to fail whether I got the ideal entry or the slippage. So I get so many questions about buying the bid, buying the last price, trying to get in cheaper, whatever. Whether I would have gotten my ideal entry or the slippage entry that I got here, this trade would have failed regardless. So the only difference is it does add some amount to the loss, but it also works in your favor when the trade works out. If this trade would have worked out, I would have gained more. So over time, it all averages out. So there really is no reason to try to get in at a cheaper price or whatever. Just figure out where your ideal entry is and try to nail that as close as you can. And sometimes you're going to get it. Sometimes you're going to get in a little cheaper. Sometimes you're going to get a little slippage. But if your plan works, after so many trades, it's all going to even out. So it's nothing to worry about in the long run. So now I'm just marking out where my ideal entry would have been had I gotten my ideal entry, my ideal profit target. I might have said something else. So marking out my ideal profit target had I gotten my ideal entry. That's what this green line is. And let's keep note of where my original profit target was, because we're gonna look at the chart at the end. 2868. So anyway, let's fast forward here and see what happens with this stock. Now that I'm in it and I've got my stop loss in place, and on a stock like this, it's super important that as soon as you enter, even if you caught slippage like that, do not become a deer in the headlights. Just immediately grab your stop loss and put it at the appropriate level according to your plan. And that's what I did. That way, if this thing could have easily turned around and flushed down just as quickly as it popped up there. So probably what happened here is there was a bunch of people shorting this, and they had their stop loss in the same place, and it caused that huge pop as they all got filled at the same time. So here I was just checking my active trade settings because I was trading a very volatile stock a few days ago, and I increased my offset. I thought I had it even higher than this, so I just moved it back down to 10 cents. So that limits the amount. But this is interesting because where I had it before at 15 cents, or I guess I put it at 12 cents, where I had it before at 15 cents, that means that the maximum amount of slippage that I could have gotten was 15 cents. So let's go back to the chart here, and So 27.10 minus 15 would be 26.95. So that means that that's where the price was when my hotkeys were triggered. So my ideal entry was 26.81. So that kind of shows you that, the slippage isn't so much Webull or me even. It's just the volatility of the stock. The stock was at 26.95 when I hit my hotkeys, even though I wanted 26.81. So it just goes to show you how volatile the stock is, and that's not always a bad thing, as you'll see as this video plays out. So let's keep going. This actually ends up, for those of you that are fans of like the 3-bar play or 4-bar play, that's what this entry ends up being unintentionally. This is an entry based on my plan and my criteria. Sometimes there's overlap where it ends up looking just like a 3-bar play, and that's what happened here. Here, this is the first bar, the second bar. This meets the 3-bar play criteria perfectly. It's a change of direction because obviously here there was a pullback. We're in an overall uptrend. And then you see the break of the previous 2 candles. That is the trigger to get in for the 3-bar play, and the stop loss is always below this candle here, and I would have gotten stopped out either way. So let's see. Okay, so there, let me show you the stop in real time. I actually caught some slippage on the stop loss, but in the right direction. So you can see I had my stop loss at 26.31 and it got filled at 26.39 basically. So sometimes the slippage works in your favor as well. So anyway, let's move on. So now whenever this happens, I have to take the next entry that gets triggered. And that's when a 1-minute candle makes a new high, as long as the price has not gone below the level that I determine the stock to be weak on, and that's right here. So if the price pulled back and broke this level, then I could no longer take a trade, and I would just have to take the -1 loss. And that does happen sometimes, and that's absolutely fine. It's not a bad thing walking away just down 1 R, which is 1 times your risk if you're not familiar. So let's see. All right, so now I'm just waiting for the high of one of these candles to break. They're both at 26.35. I'm waiting for 26.36. There, it happens on this candle actually. So let's look at it. So we're going to watch this bubble over here. We're waiting for 26.36. Now the other interesting thing, very important detail to point out, is that the volume was really dwindling as this price pulled back. I mean, it was looking like this could possibly be a pump and dump. There's not always an easy way to tell. My criteria for strength in the stock tries to avoid that, because with a pump and dump, oftentimes you'll see like one huge green candle that sends the price up, and then after that, everything just heads right down. So here we're looking for multiple new highs, pullbacks, and new highs, and that's how I avoid pump and dumps. But to be honest with you, while I was in this looking for the next entry, I was thinking maybe this is one, because the volume was getting so weak, so light. But the other possibility there is that people are waiting for the same entry that I am, and that's what ended up happening. So let's take a look as we move on. Okay, there's the, sorry, I missed it again. So we're looking for 26.36. You can see there it popped up to 26.43. That probably means that the spreads were really large on this stock. But again, if it's really strong, it doesn't matter. And you can see that because this is obviously a consolidation area, you're getting convergence here, meaning the price is moving to one single point. That signifies a consolidation area, so my stop loss goes to the low of that area. It's not wise to place it just below the previous candle in this scenario, because it would be too close, and the likelihood of getting stopped out is very high, even though this stock shows some potential strength. So again, using the 2-hour calculator, I get my 2-hour profit target, I get it in place, and now the trade is all done. I don't have to do anything else. So let's move on and see what happened with this stock. So looking pretty weak here. Again, if you're just sitting here, watching and going, I don't know if this is going to work out, and let me just stop out. I already lost a lot on the first trade. You'd be kicking yourself after you see what happens with this trade. I do not judge the trades once I'm in them. I judge the entry. I take the entry, and then everything else is done. I just let the trade play out. Either I get my 2-hour profit target hit or my -1 R stop loss hit. So again, looking really weak right now. Let's see what happens. Still looking weak. Whoops, I missed the move. Happens so fast. So we go from 26.42, 26.45. So this candle looks like it opened up making a new high, and there all of a sudden volume steps in, pushes the price up. Maybe some other stop losses by shorts were triggered, and this thing's taken off. And there my profit target gets hit. So that's the 2-hour profit target. So technically we're up 1 hour on the day, even though we would have been a little bit red. We essentially would have been break even after those 2 trades, trading full position size. However, if I was holding till 3R on all of the trades, which is something I'm tracking, so we'll know whether or not we should be holding the 3R after we've taken 100 trades, I would have ended up profitable on this, even though my risk was a lot lower on the second trade. And I could show you that on my spreadsheet, and I could show you that on the chart as well. So let's take a look at the chart. So here is PERY. This was, let's see, where was our original entry was here. We got stopped out over here. And then one thing I wanted to note is, did my original profit target get hit? Which I don't think it did. Doesn't really matter. It's just kind of interesting to see. 28.68 has not been hit yet. So, you know, that slippage really did a lot as far as putting that profit target very far away, even at 2R. But so let's see where our next entry was. It was right here, and our stop loss was about here. And then look what's happened since then. This thing's just gone up and up and up. And I believe the 3R profit target was 27.29. And let's take a look at the spreadsheet, and we can confirm that. It's good. I have some cleaning up to do here, but actually, no, it won't tell us that. But let's see here. My entry was 26.39, and the 3R profit target, let's see, what was the risk? 30 cents. So it would be 90 cents above that, so 27.29. Let's take a look at the chart one more time. 27.29, yes. So this is the 3R profit target of the second trade. And as I said, this would have made us profitable on the day. And you could see that this thing just continued higher and higher. So anyway, let's take one more look at the spreadsheet. Usually I wait until Sunday to show you this, but just interesting trade today. So just have to show you this now. Also where we're at here with our number of trades, 37, our win rate is above 40%, which that's the goal. That's just an ideal goal. Obviously, I just want this plan to be profitable. But if our win rate is 40% after 100 trades, that means we're going to be up 20 times our risk. So that means at 50 trades, we should be up 10 times our risk. Right now, we're at 37 trades, and we're up 7 times our risk. So we're right on schedule, if not a little bit ahead. If we were holding the 3R, we'd be at 9 times our risk. So that's pretty cool. And this could turn around at any point because we're still pretty early into this test, but things are looking pretty good so far. And you can see now that holding the 3R as it won today, beat out the 2R trading. It's winning overall on the entire test. So we'll see how things play out in the long run. As always, well, first of all, let me know if you have any questions about this trading plan. It is available at patreon.com/tradingarmor if you're interested. I have also a mid-cap market trading plan, a swing trading plan for swing trading SPXL, a binary options trading plan. All are profitable so far. And as always, whether or not you use one of my plans or you come up with your own plan, you need to have a written trading plan going into every single trade that should exist before you enter the trade. You can't be making up things on the fly. That doesn't make any sense, because that means that you're just doing random things. You're going to get random results, and whether you're profitable or red, you don't really know if what you're doing is working because you're never doing the same thing. So the plan should be consistent. You should be taking the same entry on every single trade at least 100 times and then finding out whether it's profitable or not after that. If you can't do that without blowing up your account, you're taking too much risk. I only trade with one single share until I've taken a plan to 100 trades, and then I'll increase to full position size. So as always, go into every single trade with a plan and stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.